Hello and welcome back to Digital Assets Daily. Good morning, good afternoon, or good evening, wherever you are in your corner of the world. I want to get into some exciting news today, and the first one, diving right in, is the Banking Committee approves Fed nominee Judy Shelton. And the next step is a full Senate vote. Before I dive into the rest of the article, I want to say thank you to B. Sly and the Black Hammer for giving me updates and letting me know that this was official with the Senate Banking Committee vote of 13-12. That's really all we need to go into that article. Just wanted to give you that quick update because next step is the full Senate vote, and then we will see if Judy Shelton, which side she's going to stand behind. She's well renowned for her statement of going back to gold, or sort of back to the future type mentality with a gold-backed digital currency or a gold-backed U.S. currency in a crypto kind of way. And then to get approved for the vote, she says she does not want to go back to the gold standard. So which Judy Shelton will we get? Will it help the digital asset space or make no difference whatsoever? Time will tell. The next article of discussion is the Central Bank Digital Currencies Design, Policy, and Implementation, the full webinar. And as we get into the article, which I wanted to share, the webinar served as a prelude to the block's Central Bank Digital Currencies, CBDC's white paper, set for release in the coming weeks. But what I think is excellent about this, the webinar began with a brief presentation on the main concepts of central bank digital currencies, the CBDCs, by the block research analyst Ryan Todd. Todd walked the audience through the data collection methodology, stating, "We've conducted a number of interviews across central banks, policymakers, researchers, tech vendors, and financial institutions." And he also shared a statistic showing that 80%, think about that for a minute, 80% of central banks worldwide are engaged with CBDC research and development. It's no longer one or two random banks. There are now 80% engaged. So you know, if they're stating that without hesitation, there's 100% that actually are. The 3 phases of global digital currency adoption. This is actually a very long article. If you're interested, feel free to click the link below and follow up on it. But since it's 3 phases, I wanted to dive right in and see if I could find those really quickly for you and just kind of highlight those parts of this very long article. And so as we get into what it states to be the first phase, all right, let's start here. The phase global stablecoins emerged from the G7 following the proposal for Libra last year. The sort of world economy leaders, the financial regulatory leaders from the G7, issued a report on the risks and challenges and opportunities of global stablecoins. So we're seeing global stablecoins emerge, and today we're seeing the rise of things like USDC. We're seeing proposals for other global stablecoins that are from the private sector industry, and we're obviously seeing the potential for global stablecoins in the form of central bank-backed digital currencies as well. So this next phase, which I think will enter in full force in 2021, is really built around the idea that this can be usable by hundreds of millions, and then shortly after, billions of people. And there are really 3 key things that need to happen. I can see each of them happening over the next 12 months in particular. The first is right now to use these fiat digital currencies or to use a stable coin like a USDC today. It's too complicated. It really requires an early adopter who's very committed to tinkering and experimenting, but the user experience is too challenging. Setting up a non-custodial digital wallet is complicated and scary for many people. Most of the digital world experiences are optimized around trading and speculating on tokens. not on just everyday payments and the actual underlying infrastructure itself. The idea of paying gas fees or having to hold a crypto commodity like Ether or something equivalent in order to transact, as it goes over people's heads, it's too complicated. So first, we just need to see the user experience improvements that will make it so that using something like USDC is as simple as sharing a JPEG photo or a text message. So we need to eliminate that complexity. We're working on things to do that. I think new blockchain architectures are making that possible as well and getting us closer to this idea of frictionless movement of value in an open public way. Now, the second is also technology related, which is using or having blockchains that can support the scale that's needed for initially hundreds of millions of people to use these. Third generation blockchain architectures are really paving the way for blockchains like proof of stake blockchains that are able to support very, very high throughput or a new novel consensus mechanisms that support greater scale. We're seeing many examples of this that are being introduced in Asia and in the US as well. Taking standards like USDC and other center stablecoins and being able to run these on third generation blockchains is also really critical to making this possible for the massive people to use these. Then third, and maybe one of the most important, is within the regulatory environment. There's critical work that's happening right now in the aftermath of Libra. The group of 20, the leading nations of the world, formed a working group through what's called the Financial Stability Board to define a set of policy recommendations for regulations of global stablecoins. We've remained involved in that process and commenting on it. And we're approaching that point where those recommendations will become standards that G20 members will be expected to adopt. When we think throughout the world, throughout the leading countries of the world in 2021, there will be a standard policy for how global stablecoins are regulated. And from what we've seen, the suggestions we think are appropriate, they very much map to the kind of self-governance that we've already put in place around the Center Consortium. And as these come into place, the combination of user experience improvements, scalable blockchain infrastructure, and clarity on the policy side of this will unlock this for massive mainstream adoption. So I think we're really very much approaching a time when digital currency will become very mainstream for everyone, everywhere in the world. And this is actually a transcript by Jeremy Allaire, the co-founder and CEO of Circle, who spoke last week at the Hangzhou Blockchain Conference 2020, hosted by Hangzhou Future Sci-Tech City Management Scheme and 8BTC. It is a very long article. Feel free to come back and click the link below, in the description below, I should say. And that was the 3 phases of global digital currency adoption. It is very interesting if you are curious on the rest of his speech. The next article, Ripple prepares to silence its silence with epic bull running. And I know as XRP investors, that's something that you really would like to hear, especially after today with Judy Shelton getting her first confirmation. Now let's see what the Senate has to say, and then let's see which Judy Shelton we get. Hopefully it's the one, once she's actually placed and elected, that still feels gold-supported assets are the way to go, because I would love to see the price of our investment begin to quickly move up. Into this article, the cryptocurrency trader known as Leo said that XRP is ready to make some interesting move upwards. In the analyst share, he confirmed that the 4th largest cryptocurrency is ready for a rapid rise. Also, Leo added that the price rise even higher when cryptocurrency reaches a significant price level of 0.205. XRP is currently trading at 0.196 and has been struggling since 2018. and has stated one of the worst performing cryptocurrencies. However, the digital asset has recently begun to make positive moves. Ripple being in preparation for a big move, Bitcoin and a number of altcoins experienced significant price increases in the past year. And in 2020, for example, during the June 19 bull run, Bitcoin reached nearly 14K, the highest price recorded since the 2017 bull market. Ethereum drew a very successful chart as the price action was largely dependent on Bitcoin, and despite the bull run, XRP's progression has been insignificant and has not changed since then. XRP gained 1,000% in just 1 month in 2017 and became the second largest cryptocurrency by Bitcoin after market value. He later lost his position to Ethereum and recently left third place to USDT. And Leo said that although XRP has not made a tremendous move since 2017, his next move will be epic. And question in many analysts' minds, will XRP lead the next bull run? I personally would say no, because it usually moves last and fast. Several analysts say current market positions point to a bull run on the horizon, not only for Bitcoin, but also for altcoins, despite lateral movements for a while. The unknown thing is when this bull run will begin. Currently, leadership is appearing in Chainlink, the ticker Link, and Cardano, ticker ADA, both of which recently joined the top 10 cryptocurrencies. However, when XRP shows a major sign of breaking in the near future, it can take the lead and lead the next bullish cycle. That would be music to all of our ears. I want to get into a final article. The crypto tax disclosures can help with IRS. Disclosure sounds like it exposes you to extra IRS audit risk, but if it's done properly, disclosure can actually reduce your risk. The crypto and taxes hardly go together like cream and sugar, yet every crypto investor or business these days faces them. For many, starting with the US IRS launch of the "It's property not currency" mantra in 2014, it has been 6 long years of trying to comply. But however, there are plenty of useful tools available that may help us with the process. But make no mistake, there are still many unanswered questions that can make doing your taxes a nightmare. Even most non-crypto taxpayers think of taxes as complex, and they are not wrong. But when it comes to crypto, the tax rules can seem overwhelming. Yes, the IRS has released a few dribs and drabs of guidance, though much of it has been in informal FAQs, such as those issued in 2019. But are they reliable is the question. The Government Accountability Office points out in its virtual currencies, additional information, reporting, and clarified guidance could improve tax compliance report, that this guidance is not binding. So, as a technical matter, you can't even rely on it. And of course, now the IRS includes crypto tax questions on every Form 1040, so be careful how you answer. And in the perfect storm that crypto taxes have become, you'll still have to do your best, and you still have to sign tax returns under the penalties of perjury. But you want to protect yourself too. Tax advisors use the term, in quote, disclosure frequently. If you can sometimes have a negative connotation and without knowing exactly why, many people do not want to, end quote, disclose unless they must. After all, discretion and privacy sounds so much better, and you may not know what disclosure really means or why you may want to do it. It just sounds like extra work or extra risk, something you do not want to consider unless it is required somehow. And no one wants a tax audit, and we all fear IRS audits, and we all want to steer clear of them. Extra audit attention is the last thing anyone wants, and ironically though, disclosure can actually reduce risk in some cases. What is disclosure anyway is the question, and disclosure is more than the usual listing of income or expenses. It is simply a type of extra explanation. How much extra explanation a disclosure involves varies considerably, not only in legal requirements, but also in practice. And sometimes the IRS says it is required, and the circumstances and tax issues can be extremely varied. Some of it is about how strong or weak your tax position is on your facts and under the law, and the IRS wants disclosure if you do not have at least substantial authority for your tax position. If you claim it and you want to avoid penalties, if the IRS disallows it, you must disclose it. You do so because your position is weak and you have indicated to the IRS that you're claiming it. Nonetheless, I'm sure that sounds like you're asking the IRS to audit you or you disallow the deduction, but it is often surprising that huge numbers of disclosures actually do not trigger audits. Most do not, and in that sense, the fear that disclosing enhances audit risk is often overblown. And technically, you do not have to disclose, but disclosing has a big silver lining. It is a way to get out of penalties, and what's more, it can also prevent the IRS from extending the usual 3-year limitations period for an assessment of an income tax. For example, if you owe more than 25% of the gross income from your tax return, the normal IRS 3-year statute of limitations is extended to 6 years. That's really all I want to get into. This article is still very lengthy and very long. Just wanted to bring that up because, again, we keep seeing more tax information, IRS, in relations to cryptocurrencies and digital assets as far as trading or investments. And there's still a lot of uncertainty and lack of clarity in that regards and in that space, but yet is now affecting us in our tax returns on our 1040s. So the reason I want to bring this up is, again, if this is something that concerns you, take a look at iTrustCapital. That is something that protects you from that. And also, too, if you have a 401k or a IRA and you feel that the iTrustCapital fits you there as well, again, click the link in the description below and it will send you right to the iTrustCapital site. All right, guys, I'm going to leave you with a final thought. The future belongs to those who see possibilities before they become obvious. And that should sound very familiar to all of you contrarian investors out there, because it's people like you who are listening right now who were very early and saw possibilities before 99% of the rest of the global population. All right, guys, this is not financial advice. It is for entertainment purposes only. Much love, much gratitude, and appreciation for each and every one of you. And we'll catch you in the next one.